Good morning, traders. Paul here with GammaEdge. Today is Wednesday, the 14th of December, my son's birthday. Let's get started. Pause your players here. Read to the bottom. If you agree, hit that play button. Here's the summary for today. Big week, as we all know. You may not be aware, but the VIX monthly, which is the largest OPEX in the VIX, normally would be expiring this morning before the open, but it expires next week. We feel this shifts how people hedge because they use the VIX as a hedge because it's opposing or a right angle to what the SPX and what equities do. When this happens, this out-of-sequence hedging sometimes throws the market into a little bit of a turmoil, so we want to be aware of that. You can do your own research. I've listed some dates here that you can go back and see what volatility happened the week of the monthly OPEX versus the following week. Just a reminder, FOMC's today. The expected move that we're looking at conservatively, open, high, low, close, is greater than 4%. That's a big number. So we can go anywhere, just like we did yesterday with the CPI number. Plus GEX remains at 4,100. If you recall, that moved up yesterday. And we commented yesterday that we didn't like the fact that minus GEX had dropped. It had dropped from its previous level to 3,700, and now it's up to 3,900. When we see the upper goalposts go up and we see the lower goalposts come up, this is generally bullish. So a little bit about a sequence there, but in general, we are moving up. Unfortunately, the storm clouds on the horizon are suggestive of this could be short-lived. The market models, whether we're looking at our short-term, our intermediate-term, or our long-term, are not confirming this push upward. So we are very suspect on what we're seeing, but nevertheless, we try not to bias our information here, and we just present what we're seeing and what the interpretations are and what the backtesting tells us. So it's kind of a mixed picture. Be aware of that. It's probably no surprise, but certainly would give some caution here to getting out over the tips of your skis, whether it's on the long side or the short side. The market model, as I said, the long-term trends are still down, very down, and that's because this bolded white line, which is the cumulative tick, it is below this, and that'll continue to pull this down over time. This is a view of history, and you can see the inversion that occurred last week Tuesday, and you can see clearly that we're starting to spread apart. It's becoming more defined. We call this a parallel down situation, which is bearish, period. There is no other way to interpret it. While we remain down, we could have fits and spurts where we make a run up at this level, but if we can't get above this, the bull is not intact, guaranteed. So we are in the mindset of selling the rips. And even though we had a major action Monday afternoon, you can see it really wasn't overly strong. And then yesterday, of course, even with the huge gap up due to CPI, you can see it was faded all day long. And we finished at near the lows of the day in the cumulative tick. So net, the market is selling this rally. They are not buying it. Just be aware of that. Key levels. We are moving upward. We had plus GEX on the SPX PM structure. That's the dailies. Shift upward and remain here. Shifted up last week, and it is now still running up here at 4,200. Unchanged down here. This is the JPM hedge that expires and rolls at the end of the month. Be aware of that. That is a big number, and it's getting bigger as the deltas get larger. Over here on the right side, this is the combo complex. 4,100 is that upside level. 4,000 is unchanged. 3,900 is the shift up from 37, and you can see it's a fairly good positive magnitude also. Another storm cloud is this expected move. This is open, high, low, close. This is not a close to close. That's material. It makes evaluation a little more difficult, but we could see some definite range movement today, and just be aware of that. The PM-Settled complex, which is the dailies, you can see nice green structure developing. That means calls are dominating overhead. That's a good thing. There are a few pockets that we are calling out here. This 4145 is actually the JPM for the end of January. It's already starting to show its head here. 4,200 is the short-term upside goal, and that's remaining intact, both on a COI, call open interest level, as well as a short-term gamma level. So just be aware, but we've got to get through this, and this is just going to continue to grow. So this is what I would call a near-term upside target, and we've got a lot of gamma overhead to play with that. Of note, we finish right at the top of transition. We see this all the time. And this is typically in response to this level where you are in this transition is a low pressure zone for the dealers, and we see it frequently, and we try to call it because it's great for a butterfly or a broken wing butterfly or some sort of condor in this area. The 0 DTE, which is what's coming off today, you can see call open interest up here at 41. You can also see a large GEX level here at 41. That's material. We're looking at these double structures right here. When you see this, to push up through this is an accelerant to the upside. And when you see this from this level going down, it's an accelerant to the downside. And so we've got this balanced structure to the upside, to the downside, and we're right in the middle of transition, the 0 DTE transition. So we try to look and see what's coming off today, net, and it's almost balanced. So we've got a balancing of calls that are coming off, and we've got a balance of puts that are coming off, both in a gamma construct as well as the delta construct. And so this is a mixed picture. There isn't anything really to tease out of this except where the overall transition levels are and where we're playing. So just be aware of these upper and lower boundaries, be aware of the transition and the fact that, to get out of this transition, which will vaporize at the end of the day, by the way, but to get out of this and be above this could be constructive for the bulls. To be below this could be constructive for the bears. The 1 DTE, which is our crystal ball view of tomorrow, is also mixed, although it does show some strength. We've got calls that are up here, so a lot of the in-the-money puts have been closed, exposing these calls, and we were also seeing some calls going up there. Look at this double structure again. Look at the triple structure that we have here. Again, as we push through these areas of liquidity, they become accelerants, and so want to be mindful of that. This structure that you see in here is back and forth in terms of deltas. This means it's mixed in terms of puts and calls. The strikes are back and forth, although the gamma above transition is all positive by definition, and the gamma below transition is negative. So we're right in this zone. We're right above this at the 4019, 4020 strike area. We would like to see a push higher. Note, we've got some little pockets of gamma and delta where we're sign changing. These are typically parking areas, and I want to call that out. So that 4065 could be, a potential area. Very little gamma here, 4045, etc. So when you look at these charts, you're looking for both the sign change as well as the sign change on the gamma. We're not really seeing a lot of that here. Very balanced again. Effectively, the market's coasting ahead of FOMC. Doesn't change the overall structure. We have a lot of calls that are coming out of the complex. As I posted this morning in the Discord, 53% of the ES has rolled into the March quarter, and so that means we still got a lot of hedging flows that are going to get redistributed because the ES is largely used to hedge the SPX. Taking a look here at the combo. Very fat, very wide transition area. Just be aware of that. This is unchanged. This is call open interest, put open interest. These have been more or less locked here since May. This is long-term money, not very liquid. Do want to call out this little pocket up here, right in this plus GEX area. If we gap up due to the FOMC, whatever, we could actually get trapped up in this area. We've seen that behavior in the past. I don't think it's going to happen, but just want to call it out that people are gunning for the 4100 strike in the SPX combo complex. More likely is this area right up into this 40-40, 40-45, 40-50 zone. You can see there's a lot of deltas back and forth, but very, very strong gamma. And this, as we move up through here, you can see where there's a lot of potential to accelerate up. So we want to pay attention to that. You want to be aware of that. To the downside, if the FOMC is considered hawkish and negative, if we drop below this 39.45, 39.50 zone, you can see that the downside targets are starting to push south, and that's material too. And so we want to be cognizant of what we're seeing. But the back and forth nature in the transition zone and the fact that we're right at the top of that, very close in the deltas. So pushing higher is going to be hard into the close, but we'll see where we're at. This is why we faded yesterday, because the structure just was not supportive of staying up here. And we called that in the morning. We said there was just really no way to do that. We faded that, and that worked out really well for a lot of folks. I would urge that same thought process, but note this pocket that's developing. And of course, there's a pocket way up here, which is supportive of that SPX PM 4200 target, but this is a bridge too far. There's just too much to get through at this point right now. So we're not, even though it's in the expected move range, we don't see our ability to get up there. Finally, last slide. We're here. This is the transition, very clear to the eye. You can see line in the sand of the downside, a closing below 39.55 would embolden the bears, and you can see here's minus GEX here at 3,900. Fairly, benign level at 18,000 relative to what we've got up on the call side. We're seeing this call distribution continue to build out. This is the JPM 4145s at the end of January. The key takeaway that I want everyone to be aware of here is the upside, that 40.25. If we can close just maybe up in this zone, just slightly above it, up towards the 40.50 zone, we could see a continued advance. If we push too high due to the FOMC, we're going to be too high in the structure, and that would be suggestive of a pullback. So just be aware of that. So that's it for today. If you like today's commentary or have any questions, come and join us at GammaEdge.us. Click on the or type this into your browser. Go over there, click on the pricing page, and fill it out. Come on in. 14-day free trial. All the tools turned on. Very, very good group of traders. Very eager to teach and to be taught. So bring your questions, bring your experience to the table, or lack thereof, and happy to engage. Follow us on Twitter, please, GammaEdges with the S, and then here on YouTube, two things. If you like today's commentary, let me know immediately by smashing that like button. That gives me immediate feedback that I'm on the right track and providing what you want. And then, of course, subscribe, because Michael, Taylor, and myself put videos out all the time and want to notify you when we have an update. So with that, I bid you farewell. Make it a great hump day. Happy birthday to my son. And we'll hopefully see you in the Discord. Thanks, everyone.